Okay. Hello everybody, good evening. Thanks for your participation to this event on space finance, and special thanks to Linda, Raffaele and Federico from Primo Space team for their support. Before starting with the webinar, please let me to introduce myself and ESA BIC Turin. I'm Leo Italiano, I'm the program manager of the program. ESA BIC Turin, that is the incubation program for space company managed by I3P. I3P is the business incubator of Polytechnic of Turin, and we are active from more than 20 years in supporting startups and deep tech company. In the program, we are looking for the best startup active both in the upstream and downstream fields. And during the program, we provide business, technological, and IPR support, as well as €50,000 equity free for product and IPR development. The call for the selection of startups, if you want to participate to the program, is permanently opened, and we'll make the second selection in September. You can apply until the 9th of September, and if you need more information, you can visit our website or contact directly me. Okay, let's go directly to the goal of this webinar. That aims to provide you with some tips on how to best prepare for an investment round. After this initial greeting, we talk about investment criteria, industry trend and opportunities, and the criteria used to evaluate a deal. At the end will be a Q&A session where you can interact directly with the Primo Space team. We are a lot of people in this event, more than 60 people. So for managing a practical way the Q&A section, I suggest you to write your question in the chat, and then we'll try to handle all the requests. In any case, there will also the possibility to make other questions in the coming days directly to the ESA BIC team, and we'll reply as soon as possible. Okay, now it's time to start. I give the floor to Raffaele, so that Raffaele, you can share your screen and present your company.
So thank you everyone for being here, and thank you Leo for the presentation and for inviting us to this event. So I start with sharing my presentation, and okay, and let me know if it's visible for you.
Yes, okay.
Okay, so so welcome. I'm Raffaele Mauro, partner at Primo Space. Primo Space is a venture capital fund focused on the space economy. I will describe it in detail later, together with our team members, Federico Cuppoloni and Linda Mazzotti. As you can see from this slide, I come from Abruzzo, which is a mountain and a wild region in Italy originally, and I have experience in both venture capital, academic experience abroad, and as a both direct investor, as an angel investor, and indirect investor through funds, and I like to write books, and actually the last one was about the economics and geopolitics of space, so I cancelli del cielo. But let's start to discuss venture capital, so how venture capital works. Basically, there are several typology of institutions actually investing in startups, from incubators, accelerators, single individuals like business angels, corporates, banks, hedge funds. But there is venture capital funds. They have a specific niche and a very clear role within the life cycle of a company. Typically, VC funds, they gain attention of companies after the very early stage of the life cycle. Typically, at the beginning, companies, they start to finance themselves with grants, with personal savings, and business angels, or sometimes, like in this case, accelerators and incubators, and then after that, they get the attention of venture capitals. Why venture capital funds are different in comparison with the business angels and single individuals and even incubators? Because they have a specific structure of obligations and incentives that makes them different. In particular, VC funds, they manage other people's money. Other people, they are called limited partners in jargon. They can be pension funds, banks, insurance companies, university endowments, and many other ones. And only a small slice of the fund, or a VC fund, is brought by the partners. In this case, for instance, in the case of Primo Space, me and my two colleagues, we put 1% of the fund, but the 99% is from other people. And so what we have to do, we need to invest and then get back the money to the other to our limited partners with a multiplier. So actually, we are kind of like a startup. And and what is the essence of the job? Is to buy slices of companies, so equity slices, ownership slices, and increase with in the space of few years the value of the company. So proportionally, our slice will increase in value, and then we can sell it at a greater value. So that's venture capital in a very simple way and in a nutshell. But there is another definition. Venture capital is the specific niche of finance for high risk, high potential, high growth companies. So other sub-industries of finance, they are not able to bring in the same level of risk and the same long-run perspective that VC funds are specialized on. So typically, the kind of investment stages that are defined by VCs are called with letters rounds, like round A, round B, round C, round D, and so on. For instance, just a few hours ago in Italy was announced the round D for Casabo, which is not a space company. They had a 100 million euros round D, but they started with those kind of smaller deals like round A, round B. The kind of numbers that you see here, like angel round up to 500K or round A up to 10 million K, they are actually, they are not a rule. They could be smaller or higher, but those are just averages. And typically those averages, they change according to the life cycle, the business cycle, and the geography and the industry. So practically an A round in Silicon Valley is like a B round in Europe, and A round during a down round market is a different thing with an A round during when the market is growing. So now we are in a down round, we are in a bearish market. But the key concept is the one of staging. So you try to test a hypothesis for each round, like scientific experiments. So you, as an entrepreneur, you try to test an hypothesis, and with each round, you validate the hypothesis and go to the next one, and you bring in more money. A typical investment process is a combination of steps. There is a deal flow analysis from typically the VC team, a deep dive within the best companies, then a due diligence, which is an external process, both an internal and external process of analysis, and then there is the execution of the transaction, which is a very complex, structured legal discussion that we are not discussing here, but maybe during the Q&A we can deep dive. After the investment, typically the smarter investors, they try to help the entrepreneurs in order to grow and scale over time. What are the typical elements evaluated during due diligence? It's of course the product and the solution and the problem to be solved. There is the competition, the technology, the business model, the future milestones, the economic and financial projections. But some of those elements, they have particular weight. So the team cohesion, skills, and motivation, actually there's, I would say, 50% of the evaluation, because they can make or break a deal very easily. In very early stage companies, the team breaking up or being unmotivated is so much more important than the other dimensions of like the competition or running out of funds, that they are truly crucial element in the discussion. I would say another crucial element is traction. So the ability of the team to generate results in a quick way, even without enough resources. Actually, one of the key elements of entrepreneurship is to generate results like prototypes or getting users or revenues without the resources of a large company. Like resources like people, time, money, procedures, legal knowledge, and network, and so on. The true entrepreneurs are he or she is able to create something from nothing. At the end of the game, the idea is to generate an exit. So most of the funds and the teams, they try to do something X years after the funding, typically selling the ownership stake. The most common hypothesis, the most common exit is the acquisition or trade sale. So basically another company buying the startup, typically a large company. The IPO, so basically going into the stock market and be like a large company. Sometimes there's share transfer to other investors. And then, of course, there are the write-offs. So not all startups end up with an exit. Sometimes they go bust, and it's part of the game. What is, I think, the iron law of venture capital is the power law. So a small number of companies, so small percentage of companies actually generate most of the returns and generate them with a huge multiplier. So if you invest in the stock market, after a few years, maybe some of the best stocks, they perform 50% more or 100% more. In venture capital, the kind of multipliers are much, much higher. So the people investing in Google at the beginning or Uber at the beginning, they get multipliers of 1,000 times. So it's a very uncommon way to reason about investment returns in comparison with other aspects of finance. There is this beautiful sentence from Paul Graham. Paul Graham is probably one of the greatest investors in the world, the founder of Y Combinator, and basically he says that it's against our cognitive practices. It's very against our intuition to think about 1,000 times returns on investments. So and it's very hard to find those black swans. So with our fund, so with Primo Space, we are trying to find the black swans. So we are trying to reason and to take risks and to look at the market in a different way. We, as Primo Space, we started 2 years ago in July 2020. It's a 86 million euros fund based in Milan and investing in multiple geographies. We invest 80% of our capital allocation in Italy and 20% abroad. And we invest tickets between 100,000 euros and 5 million euros. We just basically, as I told you before, basically in the seed and early stage phases of the company life cycle. I will not get so much into the sectors because Federico and Linda will describe them, but basically we try to address the space economy as a whole from the beginning of the value chain, so from the enabler companies to the end of the value chain, so to the application companies with both the upstream and downstream segments. So we invest in everything from launch technologies to satellites to software. We have so far 8 portfolio companies. We invested in terms of commitment amount approximately 80 million euros. It will be just a few weeks from now, it will be higher. And we evaluated hundreds of deals in our deal flow. So basically, no more than 1% of the business plans that we received get funding from us. It's also a very selective. It's a very selective process, but so it makes sense for both the entrepreneur and the fund at the end. couple of examples of the companies that were our targets for investment, from software companies like ICO. ICO is an artificial intelligence company for space missions, both for navigation systems and feature recognition within satellite images. There are companies in the ground segment for telecommunication services like Space, companies in the IoT segment like Astrocast, or enablers like Caracol, working in additive manufacturing and basically building systems and products and components, especially for big space players. Other examples are Pangea, working in propulsion technology and basically building engines, or Sidereus, building a new kind of a small launch system, very ambitious and very interesting. This is our team. So it's three general partners, Matteo, George, and me, and the investment team, Federico, Linda, and Lilian. Plus, we work together with our Chief Scientific Officer, Roberto Battiston, well-respected physicist and former president of the Italian Space Agency, and some venture partners like Marimo Nomoro with decades of experience within the industry. We also work together with scientific institutions like the Fondazione Amaldi, basically the research center, part of spin-off of the Italian Space Agency, and multiple players. And we discuss basically every day. We interact every day with the Italian Space Agency, European Space Agency, and multiple players within the ecosystem. A couple of things that we do, basically, to be very clear. So we provide capital. We help the entrepreneurs to get access to our network. What we don't want to do is to substitute ourselves to the entrepreneurs. We want to respect the role of the entrepreneur. We don't want to take the majority of the companies. We want the entrepreneurs to be free to chase their dreams, and we cannot fund research. So we are not a grant-making institution. We are funding companies, not research. So some kind of de-risking from the technological point of view should be provided before our investment. Couple of words more about the value added. But typically, we join the board of the companies. We help the entrepreneurs to structure the next rounds. We help them to head for adapting and strategy, creating their strategy. And in general, we try to make the company grow and scale effectively, and to be on the same page with the entrepreneurs and to build something together. So that's for my presentation. I will let Linda and Federico continue, and I will open for the Q&A after this session. Thank you.
Thanks, Raffaele. I think that now Federico can share the
sharing my screen as well.
Okay.
Can you see?
Yes.
Okay. Perfect. No, I don't know if I, okay. Okay, so we are delving now into the opportunity for venture capital in the space economy, as we are talking about space finance, so it's quite relevant to talk about the opportunity in the space sector for VC funds, and of course for startups entering or willing to enter this very promising field. So let me start with a very banal assumption. You all know that there's a difference between the so-called traditional space economy, rockets, launchers, satellites, big satellites, and the so-called new space economy. Everybody talks about that. You probably know everything about that. I'm not talking about this kind of off-topic. And we know that there are many drivers supporting this new space economy. So the lower costs of space launch, new services like internet provided by satellites, or let's say more long-term goals like deep space exploration or the whole lunar economy, and so on, or asteroid mining, which is, well, again, quite a futuristic kind of goal. And all of these phenomena build at least the narrative of this new space economy. The reality is that as VC investors, we have to take into account a couple of factors. The first one is is there a market for all of these new fields of the space economy? And the second one is the VC fund is structured in usually 10 years in terms of life cycle. So in 10 years, you need to generate profits from your investments. While most of these companies operating in asteroid mining or space manufacturing, the lunar economy, are usually generating revenues in more than 10 years. So they will probably start generating revenues after 2030 or something like that. So when we talk about the new space economy applied to the VC sector, we have to take into account the fact that a venture capital that was born in 2020 or even before, it might find it difficult to invest in this kind of futuristic companies, at least at the moment. So there's a sort of a rolling approach to this, to the investment thesis of a fund, in which you invest in things that start to get ready for market applications. So when we talk about the new space economy that is investable by a venture capital fund, you end up with a smaller, less broad set of fields. And we try to summarize all of these fields in a new taxonomy that you will maybe come to know in the next weeks or months, which is this one. We try to divide space startups into 4 main categories. The first one is the typical space, let's say, cluster, which is the infrastructure. So the whole bunch of companies that provide space assets, which may be hardware or software, to other space players. So I build a rocket, I build a satellite, I do provide services in orbit. This was born for space and it stays in the space economy. The second field is, let's say, the so-called space as a service. So companies that have assets in orbit and generate value from these assets. So you might have a huge constellation like Starlink providing internet services, or you might have typical Earth observation constellation, IoT, and so on, or more advanced and let's say more futuristic maybe kind of companies like in-orbit research or space tourism and so on. And these first couple of clusters are more or less the typical way we intend the space economy. When we talk about space economy, either traditional or new space economy, we all agree that this is space economy. We have a broader meaning for a space economy, so we also include companies that use satellite data, for instance, for agriculture, insurance, banking sector, monitoring of environmental data or something like everything you can monitor from the sky. But they do provide these services for other industries. So again, agriculture. You have an ag-tech startup using satellite data for monitoring the crop health of a field. This is not so common. Usually with space, we tend not to include these companies, but we do believe that they are truly space companies, as they are totally dependent on the data they get from satellites. And we distinguish between a couple of different kind of companies in this field. The first one are companies that take this data from satellites and refine this data and sell data. And then there's a second cluster, which is the biggest one actually, which is made of vertical applications, again, like the insurance or agricultural application that can be used directly by an end user, like an agriculture company or an insurance company, a bank, or so on. We also have a fourth cluster of companies, which Raffaele mentioned before while describing Caracol, which is the enablers cluster. So companies that provide services or products for the space economy, but not only for the space economy. So they are not space companies by definition, but they are truly fundamental for the growth of this space economy, and especially the space economy provides a lot of revenues to these companies. So something between 25 to 50% for our investment criteria. And they range between additive manufacturing to advanced materials that can be used for manufacturing, cybersecurity, power generation and storage, robotics. And they are very, very important also for risk mitigation for a vertical fund like Primo Space, because they are not totally dependent on the status, on the health level of the space economy. Now, I want to be very short, but I want to show you some trends in the finance of the space economy again. This is a chart by Bryce Tech, incredibly good repository of updated and very well calculated space data, which shows the growth of venture capital funding, and not only venture capital, sorry, of total funding for space startups, especially after 2018, in both number of deals and the total volume of investments, which reached last year more than $15 billion, with a very big role of venture capital firms in this allocation, but also a good proportion of other players entering this market, like grants, as you see, is quite big, and also debt to some extent. Let me zoom on 2021 just to show you the real numbers. So venture capital firms accounted for almost 70% of total investments, with almost 600 different investors pouring money into the new space economy. Again, look at how relevant is also the angel investor field for very early stage companies, which is not so common when you take this kind of technological risk. And finally, corporations. 11% means that corporations are interested in investing in these companies that usually have a true value in terms of asset they own, IP, and also competencies of the founding team and employees. Another relevant data is that while until more or less 2016, the vast majority of funds was provided by US companies, US VCs, US corporations, US capital markets. Now things are changing. So Europe, but also China, Japan, and other Asian countries like the United Emirates are providing this kind of capital, which means that if you want to build a company, you don't have to go to the US anymore. You can do it in a lot of parts of the world. Israel, sorry, forgot to mention Israel, which is a very, very good indicator when things in which, let's say, the US are the first player start to be applied also out of the US. This is usually a very good indicator of the health of the sector. Let me also show you another data about the number of companies, sorry, of VC funds investing in space companies. Maybe you don't know all of them, maybe you only know a few of them. These are VC funds, and you can distinguish between a couple of different groups of funds here. The first one is the typical big generalist fund, like Founders Fund, Sequoia Capital. They are very big funds. They have very different investment theses across different funds. They invest globally. They are very renowned with an incredible deal flow, incredible also quality of this deal flow. And they are very interested in investing in space. The other segment is made of Seraphim Capital, Space Capital, so VC funds that only invest in space. If you're a founder and you are approaching VC funding, this is very, very, very important. If you are a typical space startup and you want to approach a vertical fund or a generalist fund, well, you probably need different strategies. If you approach a big fund like, I don't know, Founders Fund, you might want to understand which kind of support they provide you with, which kind of network they have in space, which kind of other companies they supported with capital and smart money during their existence. While for vertical funds, you probably can just rely on their very vertical investment thesis, which can be very strict. So for instance, only constellations, more or less, like Seraphim, or quite broad, like Primo Space, which, as mentioned, invests also in enablers or different kind of downstream companies. Let me conclude with one additional element, which is very, very important. You know, capital markets for IPO, also SPAC, are quite difficult to activate, to be activated sometimes. So if you are waiting for an IPO, you might be very lucky and looking for an IPO opportunity during an IPO window, or you might be very unlucky and looking at the IPO opportunity when the IPO window is closed. So basically, capital markets are not prone to provide capital to these kind of companies with high risk. But this chart shows the number of increasing space acquisitions, which means that even you might have a different path towards IPO, you still have a huge opportunity, a growing trend of being acquired by large corporations. Again, this is a very positive sign for the health of the space economy. It shows that corporations which have quite big and strict rules for acquisitions are interested in space startups. They believe in the opportunity of the space economy, and they invest with direct money or indirectly through their own funds in these kind of opportunities. I don't want to go deeper. We have a Q&A session for maybe other topics, but if you have questions, of course, we can deep dive.
As I anticipated in my introduction, if there is someone interested in applying to the ESA BIC program, they can write us or contact me. And the application is possible until the 9th of September. And we are looking for a company both in the upstream and downstream field. And we can provide consulting services, support for fundraising. And this could be a good opportunity for you and for your team. For people or company which want to talk with Primo Space to present their project for first or second round of investment, you can refer also to us, and then we'll put you in contact directly with Linda, Raffaele, and Federico.
You can go to our website, in the contact page. We always answer, I promise. And just flag the Primo Space check, otherwise we don't receive the email, because we have different funds in the same company. So it's fundamental to check Primo Space.
If you want to follow us on our channel, probably in September or in October, we will organize other events like this in order to go in depth on other topics like term sheet and so on. So stay connected, stay tuned, and see you soon.
Thank you.
Thank
you for the
you.
invitation.
Thank you.
Bye.
Thanks a lot.
Bye-bye.
Bye-bye.
Bye. Bye.